Testing 1, 2, 3. Testing 1, 2, 3. Hello, everyone. I hope you are doing well. We are just going to start off with this AAA session. And the agenda for the session of today is going to be that we shall be going through the latest examination paper of this AAA, and that too on the ACCA CBE practice platform. So this is what the agenda of today's session is. And because you see what I have actually seen is that a lot of students, they have been having issues in handling the CBE platform of ACCA. So that's why I'll be conducting this session on the ACCA CBE platform, so that you all could have a good idea that how this whole CBE works. I'm sure a lot of you people might have actually attempted a paper or two on the CBE yourselves. But again, it's important that we go through the CBE format together, so that you can actually look at the way I'm actually handling it. And maybe you could apply the same techniques when you are doing these type of questions in the examinations. So that is something that we could do. Well, happy app, I don't know what is actually, because it's about country to country, that the rule actually varies from country to country. That in few of the countries, the CBE platform is still not implemented. So in those countries, you will be giving the paper-based examination. But in case if you are in a country where the CBE platform has been implemented, so you don't have a choice. All that you have to do is that you have to follow the requirements of the ACCA. You can't choose on your own. You got to follow the requirements of the ACCA. So I've actually gone on to this specific platform of CBE. Okay, anyone else from UK? Because there is a student from UK who is not clear that what exactly is the status of the exam with the UK. So let me know. Okay, so I'm starting off this paper. This is basically AAA, September, December 2021 examination paper. So as you know that there is this, so we are starting off with this AAA September, December 2020 examination paper. As you know that there are two sections. One of them is section A and the other one of them is section B. What is there in section A? There is a single question in section A which is worth 50 marks, and there is There are 2 questions in section B. Each of these questions are worth 25 marks each. Now let's move a bit forward and discuss further. So basically, we're going to start off with this examination now. The section A. The section A, we have now got this section A in front of us. As you could see that this is basically a standard CBE format for the professional levels that you would come across. And what exactly is there in this specific CBE format? There's this one thing which is these are the some of the introduction pertaining to the question. Okay, there is a question, Alna Nazir, should we start from section A or section B? It totally depends upon you. I would suggest that you start off with section A. Maybe it could take a bit of a time, but again, it's a maximum marks that you can get out of this specific question. So always to try and get the maximum number of marks that you can, that is always going to be something that's going to help you out, right? So now let's move a bit forward and let's discuss further. The next aspect of it is basically there is this introduction section. Then on the left hand, there are these exhibits. And along with the exhibits, there is actually a section of requirement. And then you have got some briefing notes. And then you have got a spreadsheet. Now, you would actually see in a lot of papers that this actually appears to be word processor. Okay, so now let's move a bit forward and let's discuss further. The next aspect is basically you generally come across the Microsoft, it says the word processing document generally. But what happens here is that in this case, it's actually mentioned as the briefing notes, probably because the examiner would have would have required you to prepare the briefing notes. That's why he's mentioned it to be the briefing notes over it. So the briefing notes, then there is this spreadsheet. This is an indication that probably you would be required to do some of the ratio calculations, some of the analytical procedures calculation. That is something that you would have been required to do. So anyways, let's just go through it. It says it is 1st July 2005. You are a manager in the audit of Pegasus & Co., a firm of chartered certified accountants. You are assigned to the audit of Crux Group, which has a financial year ended 30th September 2005. So you could just select and you could click the highlight button and you will get the highlighted. Now, the Pegasus was appointed auditor to the group in January 2005. I repeat, Pegasus was appointed auditor in January 2005. Now, the group operates in the travel industry, offering a selection of worldwide itineraries and has a fleet of 20 cruise ships. So this is an important area that the group has got 20 cruise ships. The group operates 3 brands which provide different types of cruise experience. So you've got 20 ships in which you operate 3 different types of the cruise brands, and each of the brand which you operate actually gives you this different type of cruise experience. Now, what next is there? It says the following exhibit available on the left hand side of the screen provide information relevant to the question. So there is the partner's email which he have received from Norma Star, the group audit engagement partner. Background information in matters relating to the audit planning. And then the third one of them is basically selected financial information, which is extract from the group management accounts. Then the next one of them is the audit team meeting notes, extract from the meetings taken at the recent audit meeting. Now, before I go on discussing the question, what I would do is that I would go through the requirement of the question. I would go through the requirement of the question, that what exactly is the examiner asking us to do in this question. So it says, respond to the instructions in the email from the audit engagement partner. Respond to the instructions in the email from the audit engagement partner. That's what you got to do. Now let's try to understand further. So what is it? That means there is nothing mentioned in the requirement. It's actually in the partner's email that every single thing is being mentioned. It's actually in the partner's email that every single piece of information is mentioned. So what you could do is that you could actually drag the window and you could enhance the size of the screen. You could move it here and there. You could go on to this automatic zoom and you could just zoom it to see and to read it better. So let's just try to go through the requirements of the question, that what exactly are the requirements of the question. Let's try to understand them. The first one of them is basically, it says to audit manager from Norman Star, the audit engagement partner. And what does he say? He says, I provided you with some information which you should use to help you with the planning of the audit of our new client. Always remember, it's a new client, the Crux Group. What is it? It's a new client. Okay, so what happens is that this is a new audit client. Now you would know I've opened up the scratch pad and I've mentioned that whenever there is this new audit client, so with respect to the new audit client, the audit risk is there. I repeat, the audit risk is there. Now, for the financial year ending 30th September 2005, I require you to prepare the briefing notes. I require you to prepare the briefing notes for my own use, in which you, using the information in all exhibits, evaluate the audit risk to be considered in planning the group audit. So now there is a 26 mark requirement. It says you are not required to consider audit risk relating to foreign exchange transaction and balances, as this will be planned separately. Now try to understand this thing. When the examiner says evaluate the audit risk, so what exactly does he want you to do? He means to say that first of all, you got to identify, and then what you need to do is that you need to explain why is it a audit risk. So when the examiner says evaluate the audit risk, so it actually is like this. He wants you to identify the risk, and then he wants you to actually explain why exactly is it a risk. Why exactly is it a risk? Now let's move a bit forward and discuss further. So he's asking us that in case if you come across, I repeat, he's asking us that in case if you come across this specific scenario, that there are these foreign exchange risk, etc., you got to ignore them. Why do you need to ignore them? You need to ignore them, the reason being that they are not going to be relevant for this specific scenario, because the examiner has actually examined it at a later stage in a different requirement into this specific whole question. So that means what you got to do is that you got to wait for it. Now what next is there? Let's talk. It says design the principal audit procedures to be performed on the segmental information relating to the group's revenue. So what we need to do is that we need to perform the audit procedure pertaining to the group's audit, the group's revenue. So these are 31 mark requirement. Then evaluate the matters to be considered in deciding whether Pegasus and company should accept the engagement to provide advice on the group social and environmental information. So basically what happens is that you have to decide if you should accept the requirements for the accepting of the engagement to provide advice on the group social and environmental information. Respond to my request regarding the use of data analytics to enhance the audit efficiency and effectiveness and quality in the group audit. So that's what you have to do. and there are these 4 marks which are the professional marks. So let's try to have a discussion of all this. Let's discuss about the background information. We now know that one of the requirements is actually to talk about the audit risk. The second one of them is the audit procedures on the revenue. Now, let's start about the background information, that how exactly are we going to cover up the background information. So with respect to the background information, it says that the group operates cruises under 3 brand names, which offer passengers a variety of cruise itineraries. With a wide choice of destinations, cruises typically last for 2 weeks, although some may last up to 6 weeks. So basically, the duration of the cruise is 2 to 6 weeks. The brands are internally generated. So when the brands are internally generated, that means they are not capitalized and therefore not recognized as an intangible within the group financials. Information about the 3 brands operated by the group is as follows. Number one of them is cruises, which visit beach destinations in the Caribbean, Europe, and North America, is the Sunseeker Cruises. The Explorer Cruises, which focus on visiting cities and landmarks around the world. The Pioneer Cruises, which take in areas of natural beauty, including Antarctica. So you've got 3 different types of cruises. One of them is basically in the European, Caribbean, North America. One is basically the natural beauty sites, and the third one of them is city and the landmarks. Now, the business developments in the year. Now, let's just try to identify as many audit risks as you can while doing this scenario. I repeat, try to identify as many audit risks as we can while doing this specific scenario. So what exactly are we going to do? Let's try to understand that. Basically, it says that cruises business development, Sunseeker. In this financial year, the group will spend 75 million on upgrading and maintenance of the Sunseeker ship cruises. So if you are going to be spending this amount, what I could simply do is that I could identify in this briefing notes also that when it comes to the audit risk, I know that there is going to be one of the scenario, which is the expenditure on the development of the expenditure which is going to be incurred on the development of the cruise ships. So if it is going to be on the cruise ships, so what actually happens is that I'm just going to write down the points. The risk of classification and appropriate accounting could actually be one of the issues with respect to it. The risk of classification, the risk of inappropriate accounting could actually be something that could arise with respect to it. Now, next is it says these luxury ships have to adhere to very high standards, so the group regularly incurs high expenditure on their maintenance. It says as well as refurbishment, several ships have been enhanced by the installation of new entertainment facilities, including cinemas and gyms. Equipment in the gyms will need to be replaced on an average of every 3 years. So the equipment in the gyms need to be replaced every 3 years. What does it actually mean? When we talk about this would actually mean the equipments in the gym. The equipments in the gym. When you talk about the equipments in the gym, so they need to be replaced now. What next is there? It says Explorer cruises. The Explorer cruise ships, which is still, while still luxurious, are the oldest ship in the fleet, and the group is gradually replacing them with the new ships. During this financial year, 2 new ships with a total cost of this will come into use. The ships took 3 years to build and were constructed by Vela Shipbuilders, a company which is not owned by the group. However, chairman of the group, Max Draco, is also the chairman of Vela Shipholder Company, and his son is the company's chief executive officer. So if you could just see that this Vela Shipbuilders is actually going to be your related party. What I could actually say over here is that I could say that the Vela shipbuilders is the related party. So there could be related party transactions which may take place. The fourth one of them is, it says, a further 3 ships are currently under construction by Vela Shipbuilders Company. The group has taken out a loan of 180 million with a 6.5% fixed interest to finance this capital expenditure. So what actually happens is that the recognition of ships and the de-recognition of the old ships, then there is this borrowing cost capitalization. I repeat, there is this borrowing cost capitalization that's also going to be one of the risks. Now, let's move a bit forward, because you have actually obtained a loan, and what you have done is you have constructed these ships, you have financed the construction of these ships via loans. So I repeat, you have actually financed the construction of these ships via loan. So that means the loan amounts are going to be considered as what? I repeat, the loan amounts are going to be considered as something that you would say that they are actually going to be the borrowing cost which is incurred on a qualifying asset. So we will have to apply the accounting of IS 23 borrowing cost. So I repeat, we would have to apply the accounting of IS 23 borrowing cost. That is something that we would have to do. Now what next is there? If I move a bit forward, I am actually gradually identifying the risk as soon as I'm going through the question. The next one of them is Pioneer Cruises, which says these cruises are for more adventurous travel and are growing in popularity in order to visit certain destinations on these specialist cruise ships. Okay, now I'm sorry, I actually forgot one more thing which I think could be done over here, which is that the impairment of the old ships. Impairment of the old ships. Why? Because the old ships are being replaced, and when these old ships are being replaced, that means that these ships are not going to be eligible for capitalization anymore. Now what next is there? The next thing is that the group has to acquire, in order to visit certain destinations on the specialized cruises, the group has to acquire operating licenses from the local governments. The cost of the license acquisition is capitalized as an intangible. So basically what happens is that okay, so these are these licenses. So basically I'm just writing down. I am unable to find anything right now with respect to this, but I'm just writing down because there is this piece of information given. So I'm just writing it down. I repeat, I'm just writing it down. Now, what next is there? So this specific appendix is done now. So we are now going to move on to the next appendix, and that is selected financial information. So when you have this selected financial information, what is available over here is that it says Crux Group, the group management accounts projected to 30th September 5, actual to 30th September 5, operating profit, profit before tax, total assets, etc., etc., etc. And we are being provided further information. So what I'll do is that as soon as I will just try to actually see what best could be done with this information. What we could do is that we could possibly copy the whole of it. We could possibly copy the whole of it, and we could just paste it. Okay, just wait a bit. I have copied it. I'll go into the spreadsheet. I'll paste it here. Then I'll go back to this sheet again. I will copy and I will paste it also. You may be wondering that what am I up to? All that I'm doing is that I'm gearing up to actually do the analytical procedures on the spreadsheet that is given to me by the examiner. So I'm gearing up to actually do the working on the spreadsheet which the examiner has given to me. I'm copying it again and I'm pasting it also. Now, if I could just tell you what have I done, I have actually copied the information which is given in the question. I've just copied the information which is given to me in the question. And what will I be doing? I will be utilizing this information later on for doing the analytical procedures. Now, this is another skill that you should be aware of, that this is something that is also going to help you out. I repeat, this is also something that's going to help you out. Now, let's move a bit forward and let's discuss further. The next thing is that if you could just look at this specific thing. With respect to the revenue, we are being told revenue includes passenger ticket sales, which account for approximately 85% of revenue. When customers book a cruise, they are required to pay a refundable 20% deposit, which is initially recognized as deferred income. The balance of 80% is paid at least 6 weeks before the cruise commences, and at the time, the point is recognized as deferred revenue. The full amount of ticket price is transferred to revenue when the cruise starts, irrespective of duration of the cruise. The remaining 15% is derived from onboard sales of food, drinks, entertainment, and other items to passengers. Management monitors this revenue stream closely as it achieves a gross profit margin high, and staff are encouraged to maximize this sale. Now, what I am doing is I'm actually copying this onto my briefing notes section under the head of revenue, because I'll be using this information to actually draft something pertaining to revenue. Now you would say that why are you copying, pasting? Because I know that this is actually going to be, when it is going to be in front of me, I can do a lot of things out of it. Now the next thing is that it says revenue is presented on a segmental basis in the notes to financial, with segments based on 3 brands of the group. So the projected and the actual. Note number 2, operating licenses are required for Pioneer cruise ships to visit certain destinations. Licenses are amortized over the specified period to which these license relates. Okay, we know this with respect to licenses. The third thing is that property, plant, equipment comprise as follows: the ships in use, the ships under construction, other PPE, accumulated depreciation, so and so, so and so. Now, so we have got the whole information over here. Now, what I'll do is that I'll go for the audit team meeting notes. It says a meeting took place yesterday in which the audit engagement partner discussed several issues. Last week, the government of several countries which form major part of Pioneer Cruise arteries withdrew their operating licenses with immediate effect. So that means what happens is that the impairment of licenses due to withdrawal. Just wait a bit, please. Okay, so I had written licenses and I had told you people that I don't know what is going to happen with respect to licenses, but I'm just writing down. But now we have been able to identify that these licenses are highly likely to be withdrawn. Now, see, so what next is there? The next situation is the government have started visit that this is likely to be a temporary measure, but being in place to the number of tourists, the number, but being put in place a limited number of tourists visiting areas of natural beauty, but they will not confirm when the group can resume operations in these countries. Now, this is also an indication of the impairment for the whole segment. Now, this could also be considered as the indication of impairment of Pioneer Cruises. You would say why? The reason being that the whole Pioneer Cruise segment would be subject to impairment. Now, what next is there? It says cyber security attack. Last month, the group suffered a cyber security attack in which the personal information of 1,400 customers, including their credit card details, were stolen. So the information Okay, so basically this information was stolen according to representative of the group audit committee. The group's internal team audit team had not properly assessed. The group's internal audit team had not properly assessed the risk relating to cyber security, which is a requirement of recently introduced data protection legislation in the jurisdiction in which group operates. The issue which led to the security attack has now been resolved. So you could probably say that there is this weak internal controls, or you could also say that the internal audit department showed complacency. Now, the next thing is social and the environmental information. With respect to the social and the environmental information, what does it say? It says that the group audit committee has inquired whether Pegasus can provide additional services to advise management on how to measure certain social and environmental information, which is to be published on the group's website and is required by the new regulations in the industry and is required to be submitted to new regulatory authorities. Okay, so these are few things with respect to data analytics and all that. Now, what are the requirements to this question and what are the things that you need to consider? I think this seems to be a very easy question from the examination perspective. And if you compare this question with the past examination question, this seems to be a very easy question. Although we have not performed the analytical procedures till now, but generally seems to be a very easy question. Now I've got this group revenue, I've got this operating profit. So what I could do is that I could calculate the operating profit margin. When you've got this operating profit margin, this is this divided by this, and you could copy it here. Now the next one of them is basically the profit before tax, net profit margin is gonna be this profit divided by the sales. The next one of them is you've got total assets, included is the licenses and the property, plant, equipment. Then you've got revenue per segment. There is this change in revenue for each segment that you need to calculate. We've got these three segments. We've got these three segments. How exactly are you going to be calculating the change? It's going to be like this minus this divided by this. So this and this is how it is going to be. Now what next is there? So we have actually identified this revenue per segment also. The next thing is that you've got property, plant, equipment, which is ships in use, ships under construction, other PPE, accumulated depreciation. You could also calculate the return on assets. You could calculate the return on ships. A lot of you people would be wondering that do we need to delete these extract or what? You could just write down this is the extracts from the question. You could just write down this is the extract from the question. So this profit before interest and tax divided by total assets. Or you could rather calculate the average assets. It has to be like this, profit divided by this opening assets plus the closing assets divided by 2. Okay, so if I could just try to calculate all of these are since percentages, so I would just put it like this. I've got my answers. I repeat, I've got my answers. I've got my answers. I can even increase the size of these just to actually have a better appearance and the better presentation. So now you could see that the operating profit margin is increasing, the net profit margin is also increasing. The revenue of the Explorer cruises is declining. The revenue of the Explorer cruises is declining. And then the Pioneer cruises has increased significantly. There's a return on assets, which is like this. Now let's try to understand all this. So basically we have been able to identify the audit risk, and we are now going to talk about each one of these audit risks. I repeat, we are now going to talk about each one of these audit risks. So is there any other risk that any one of you can identify except for the risk that I have identified? It did mention to us that you don't have to talk about the foreign currency. Anyone, if you could suggest any risk? Okay, thank you, Kamran. Just let me see. At the start of the question, you said that you have seen that the government has imposed some regulation. Where is it? Okay, seems like I'm unable to identify anyways. So what happens is that we had this expenditure that was being done in Sunseeker cruises. Okay, now see. What happens is you could actually, I mean, I can just tell you in terms of the bullet pointers, because I think that the bullet pointers are gonna help you a lot. $75 million, which is dash percentage of the total assets and is material, is planned to be spent for the upgradation and refurbishment of the ships belonging to Sun, belonging to Sunseeker cruises, belonging to Sunseeker cruises. Sunseeker cruises. There's a risk that certain expenditure, okay, what you could do is that you would say certain expenditure may be capital nature and some could be revenue nature. There could be a risk for capital, for revenue nature expenditure to be capitalized. Further, the depreciation calculations may not reflect the time proportionate expenditure made. Yeah, thank you. I missed out that, Huda Mohammed. Thank you very much for highlighting that. There is this since it's actually your first year of audit, then basically what happens is that there has to be a high detection risk. There has to be a high detection risk. You could say that the first year of audit, that's one thing that you need to keep in
should have to keep in mind that this is the first year of audit. So there are obviously certain problems with respect to the first year of audit. I did highlight this, but unfortunately I did not mention it when it was supposed to be mentioned. So basically this is also another risk, that this is the first year of audit, and that is basically the risk pertaining to the first year of audit could be there. Now let me tell you that what could be the risk with respect to the first year of audit. So the detection risk is high. And what is the reason for the higher detection risk? Let's just try to understand the reason for the higher detection risk. The reason for the higher detection risk is that it's a new client. It's a new client. It's a new client. There is a lack of understanding of business. Second thing is that the opening balances could be misstated, which is that not correctly brought forward, or maybe last year financial statements may not be correct, etc., etc. There could be multiple types of issues that could arise with respect to the entity. I repeat, there could be multiple types of issues that can arise from the perspective of the entity. So all that you have to do is that you have to keep this thing in mind also, that there could be multiple issues that can arise from the perspective of the entity. Now let's move a bit forward and discuss further. Then there are these equipments in the gym. So what happens is that the equipments in the gym, they need to be replaced after every 3 years because their life is 3 years. Okay, now, so basically the equipments in the gym, the life is 3 years. It's different to the life of other assets. Life of other assets. So the life is 3 years. It's different to the life of other assets. The next thing is basically that there could be an issue with respect to the depreciation and derecognition risk, that not depreciated over 3 years and instead depreciated alongside entire cruise ship. There is another risk that may be possible this could happen. I repeat, may be possible this could also happen, that the assets replaced are not derecognized. The asset replaced are not derecognized. That could also be the issue. Okay, there is this bug in case if you do copy, then the formatting does not remain the same. Now there is this Vela shipbroker, sorry, Vela shipbuilder. It's a related party as owned by the chief executive officer. Son of chief executive officer is the CEO of the company. Vela, Vela Shipbuilders is a related party. Disclosures as per IS 24 are required to be made. There's a risk that disclosures are not provided. So I repeat, there is a risk that the disclosures are not provided. Okay. So the risk that the disclosures are not provided, the recognition of new ships and the de-recognition of the old ships. That is also another area. So it could be that you could mention that the old ships in what is that division? The second division. What is the name of the second division? Explorer cruises. The old ships in Explorer cruises the old ships in the Explorer cruises are being replaced with the new ships. The old ships in the Explorer cruises are being replaced with the new ships. Now, what next is there? The next situation is that the new ships are recorded under capital work in progress. Risk that old ships are not de-recognized. Risk that the new ships acquired during the year are not depreciated on a time proportionate basis. There's also one risk, which is that so these are a few things that you would have to mention. I repeat, I am just writing down the pointers. The reason being that if I am going to keep writing the whole paragraphs, it is not going to be fruitful for you people. You won't be able to have a good idea about the things. So it's better for you to actually get through these bullet pointers. Okay. So now what happens is that the Explorer cruises are becoming old aged. The revenue of the Explorer cruises segment has declined by 5.26%. Has declined by 5.26%. So what happens is that the Explorer cruises are becoming old aged. The revenue for the Explorer cruise segment has declined by 5.26%. This is an indication of the impairment of the cruise ships being held by the Explorer cruises segment. There is a risk that impairment, loss, workings, or testings are not performed, resulting in overstatement of property, plant, equipment. There's this borrowing cost capitalization also. The new ships are funded using loan. Since the ships are taking 3 years to complete, therefore they are taking a substantial period of time to get ready for use or sale. These ships should be categorized as qualifying asset, and the borrowing cost incurred shall become part of the cost of these ships. There is a risk that borrowing costs have not been capitalized, resulting in resulting in understatement of the cost of ships and overstatement of finance costs. Okay, then there is this licenses, which you could say that the withdrawal you could say that withdrawal of licenses by the authority is an indication of impairment. The withdrawal of license by the authority is an indication of impairment. All licenses should be tested for impairment. Since no benefits are expected to arise because the ships cannot visit these locations, therefore, these licenses shall be completely written off. Therefore, these licenses should be completely written off. Okay, now with respect to the revenue, what could be the risk? It says revenue includes passenger tickets, which accounts for approximately 85% of revenue. When customers books a cruise, they are required to pay a refundable 20% deposit, which is initially recognized as deferred revenue. The balance of 80% is paid. The balance of 80% is paid at least 6 weeks before the cruise commences. And at that point of time, it is also recognized as deferred revenue. Now it says the full amount of ticket price is transferred to revenue when the cruise starts, irrespective of the duration of the cruise. That's where the problem lies. You see, this is where the problem lies. So what happens is that the presentation of contract liability in the financial statements, since the amounts are received in advance, what happens is that the full amount is transferred, although the performance obligation is only satisfied once the cruise trip is completed. Management encourages more sales for on cruise items. There could be misstatements in the onboard cruises due to more pressure being put on such sales. Okay, there is this another one, which is a point which is coming up from here, which is 10, the operating segment. Since entity presents its segment as 3 types of cruises, there could be a need for, there could be a risk that segment disclosures may not be appropriate. There could be the risk that the segment disclosures may not be appropriate. Okay, there is a student who is saying that 15% revenue from the sale of food on the cruise, it should be presented as an operating segment. Okay, no, it's not necessary. I repeat, it's not necessary. Now you would say why? The reason being that it's up to the management that how they want to present their operating segments. They're presenting their operating segments on the basis of these different types of cruise liners, because this is how the management also looks at. So if the cruise liners are already presented as an operating segment, the sales are being done within those segments. So you cannot present the sales as a onboard sales as a separate operating segment, separate report. It's already part of the different segments. Okay. Now, lastly, this number 10 or number 11, which is basically the indication of impairment of Pioneer Cruises. Now, the licenses are cancelled. Highest revenue generating segment, the revenue has increased, but the future sales are going to decline. Licenses are already impaired. The other assets, there are indications for impairment of other segments too. The indication for impairment of other segments too. Okay, there's this lastly, which is the weak internal controls are demonstrated by the cyber attack being neglected, non-compliance with data protection act, the risk that other non-compliances may also exist, the risk that multiple misstatements could arise due to weak controls. So these are all the things that could possibly happen. I repeat, these are all things that could possibly happen with respect to this entity. Do you get it? Okay, so we are done with one of the area of this question, which was basically no, nobody is actually many. I'm just taking the pause because I want you people to absorb. I can go ahead without the pauses, but then it's going to become difficult for you people to be with me. So that's why I'm taking the pause myself. So we have actually done one of the thing, which is we have gone through one of the areas, and that was the that was basically we have gone through this audit risk section for the briefing notes. It is not the way that you're going to be writing down the answer in the examination, but I've just mentioned them this way just to make sure that you people are able to understand, just to make sure that you people are able to understand. Now, what's the next aspect? It says audit procedures to be performed on the segmental information relating to the group's revenue. To be performed on the segmental information to the group revenue. Now, for this, what I would want you to do is that, I repeat, what I would want you to do is that I would want you to understand that the segmental, um, how the segmental revenue is to be presented. What is the requirement as per the uh, for what is the requirement as per the IFRS 8, because it's a 5-mark requirement, and you might think that this is a requirement on IFRS 15 revenue, but no, this is more of a requirement on IFRS 8 operating segments. So what I'll do is that I'll just open up the relevant IFRS 8 operating segment things, and I'll talk about the IFRS 8 operating segment. That is something that I'll do now. So let me actually guide you people with respect to it. Basically, what happens is when we talk about the IFRS 8 operating segment, we know this thing that what exactly is an operating segment. If I could just talk about the definition of operating segment, so there are multiple things that you would keep in mind with respect to the operating segment. And what is that? It is the component of entity um, whose results are regularly reviewed by chief operating decision maker, which enters into revenue generating activity, and for which separate financial info is available. So when it comes to the operating segment, you need to understand that what an operating segment is. So if I could just talk about the operating segment, you would realize this thing, that the operating segment is the component of an entity whose results are regularly reviewed by the chief operating decision maker of the entity, and which enters into the revenue generating activities, and for which the discrete financial information is available. For which the discrete financial information is available. Now let's just try to understand few more things, which is basically there is another area, and that is called the concept of reportable segments. And what exactly do you mean by reportable segments? So reportable segment means those operating segments whose results are separately presented. So those operating segments whose results are separately presented, they're going to be considered as your reportable segments. So I repeat, those operating segments whose results are separately presented, they're going to be considered as your reportable segments. And when it comes to the reportable segments, there are certain criteria which you have to meet. And now what actually happens is that the disclosure, when it comes to the disclosure requirements, so I would just tell you that the disclosure requirements with respect to the revenue is that you have to present the sales, which is inter segments and the external sales. Also, you have to provide the reconciliations. And what are those reconciliation? The reconciliation is basically the total sales of the segments to the entity sales, etc. And also there is one more thing, which is when you are giving geographical disclosure, so you have to give the disclosure of the revenue of the key areas, locations. And when you are giving the customer disclosure, you have to talk about the sales of the customer disclosures also. So these are the things that you have to do. I repeat, these are the things that you would have to do. So now what happens is that whenever we are preparing the audit procedures, we always think what could go wrong. So if I could actually tell you that what is going to be the answer to part A and the part B, always I'll actually, whenever I'll be writing down the answer, what I'll be doing is I will be copying the questions requirement. I will mention the questions requirement in this briefing notes. I would say this is how you got to mention. The second one of them is this is the second requirement. And I know from the marks that the examiner wants me to write down 5 points. The examiner wants me to write down 5 points. So what am I going to do? I'm going to say that in order to test segmental information relating to group revenue, the following audit procedures are required to be performed. The number one of them is inspect management accounts to establish the basis used for reporting to the management and confirm that is 1 point. I repeat, that is 1 point. Now what next is there? There is a second point that you have to do, that you have to keep in mind. And that is basically that because I had one thing, which is that have they used the same basis? Now, inspect the management, inspect the minutes of the BOD meetings to evaluate if the results of these segments are discussed, to confirm that these segments results are regularly reviewed by chief operating decision maker. The third one of them is inspect notes to the financial statements to confirm that segmental disclosure are reflecting appropriately the breakup of revenue between internal and external revenue. There's this fourth one. I repeat, there is this fourth one. And what is that fourth one? That is basically when I talk about this fourth one, what do I need to do? I need to say that um, to confirm that the revenue amounts are correct. Reperform the reconciliation of revenue reported in financial statements with revenue from operating segments to confirm that it reconciles properly. So you see, you need to keep your risk in mind. One of the risks was that these segments may not meet the definition of operating segments. One of the risks was that the reportable segment criteria may not be met. So, okay, for the reportable segment criteria, I have not performed anything, which is reperform the test for checking reportable segments that the operating segments reported meet the criteria for classification as reportable segments. That it meet the criteria for reportable segments. I got disconnected because of my internet issue. We are having some issues here in Pakistan, where we are actually um, having this issue that unfortunately is something wrong with the IP of the Zoom. That because of that, the Zoom is not operating properly on every internet over here. So let's move a bit forward and let's discuss further. Let's discuss further. Okay, now, so basically these are the different type of tests that we have performed, and the agenda and the objective of these tests is to make sure that we are able to, I repeat, the agenda and the objective of these tests are that we are able to perform, or we are able to check these procedures. I mean, like this segmental revenue. Are you all okay? Now, so we are done with this. Now, let's move on to the next requirement of the question. It says evaluate. What does it say? It says evaluate the matters to be considered in deciding whether Pegasus and Co. should accept the engagement to provide advice on the group's social and environmental information. So you got to evaluate the matters. I have just copied the requirement, and I'm just copying the requirement. I've just pasted the requirement here. Let's try to have a discussion on this. That should we be doing it or should we not be doing it? Evaluate matters to be considered in deciding whether Pegasus should accept the engagement to provide advice on the group's social and environmental information. Let's just look at the social and environmental information related to his. The group audit committee. The group audit committee has inquired whether Pegasus can provide an additional service to advise management on how to measure certain social and environmental information, which is to be published on the group's website and is required by the new regulation in the industry and is required to be submitted to the regulatory authorities. Now, what next is there? It says the social and environmental information relates to matters such as water efficiency, energy consumption, charitable donations, and initiatives which support diversity in the workplace. In recognition that this work is quite urgent, as the deadline for the submission of the report is on 31st October 2021, we have requested that the report be submitted by the end of this month. And environmental information. Now, see, what happens is that, in short, it's an engagement. In short, it's an engagement. So whenever there is an engagement, there is this client acceptance procedures that you have to perform. And those include the consideration of the ethical issues and the ethical dilemmas. So if I could just tell you that what exactly are the things that we are going to be covering and that we are going to be considering in this. So there are basically multiple things that you need to cover. The first one of them is there is going to be the first one of them is integrity. The second one of them is objectivity. The second one of them is going to be the objectivity. Objectivity issue is going to be something that needs to be covered up. Yeah, thank you, Mary. Thank you, Mary. Now, the objectivity, the first one of them is integrity. There is nothing pertaining to integrity. The objectivity, yes, objectivity will come. The third one of them, ethical principle, is the professional competence and due care. So yes, The professional competence and due care would also be the relevant thing. Then the confidentiality, which may not seem to be the right thing. The professional behavior may not be the right thing. Let's talk about the ethical threats. Self-interest, yes, the self-interest threat will arise. Self-review, yes, the self-review threat would arise. The advocacy threat, apparently no. The third one of them is intimidation threat. May arise, may not arise. The advocacy threat may not arise. The familiarity threat may not arise because you are a new auditor. You are a new auditor. The next one of them is management role may arise. Now, the other thing which we say, which are mentioned as premise, management accepts the responsibility. The audit committee approves the work. The other thing is that there are legal considerations also allowed in the jurisdiction. What are the prescribed safeguards that need to be taken? Okay, the further other aspects could be the availability of the resources. Okay, deadlines, availability of resources, etc. Now see, what I'm going to do is that I'm going to relate all of this to the scenario, and I'm going to tell you that what do I need to do with respect to it. So I would actually say that basically, do we have the expertise? You got to consider that do we have the expertise to do this task? Second is that it's a time pressured engagement. Time pressured engagement. It's a time pressured engagement. So the quality of work may be compromised and due care may not be exercised. Higher fees are offered. Financially will be an attractive opportunity. So self-review, it's required by law. We are auditing company's financial statement and we shall be reviewing / guiding management about how to prepare the environmental and social reports. The self-review threat will arise. So these are the things that you would have to actually cover up. Now, the management role, management should understand it's their role to prepare information we can only guide and not prepare the information for them. Further, the management accepts its responsibility to prepare information and to provide us access to the relevant information that we may need. Will the audit committee approve us to perform this engagement or not? So that is also something that you need to cover up. We need to cover up, is this allowed in the jurisdiction? What are the prescribed safeguards that need to be taken? The deadline is covered, availability of resources have to be considered over here. Resources and their availability is to be considered. So you see, what is actually going to happen is that what you need to keep this thing in mind is that from the examination perspective, you need to understand that the examiner would be requiring you to actually tell and explain all the matters, all the factors that you will consider. Okay, any issues, any problems, please let me know. Yeah, anyone having any issues, any problems, kindly let me know. Okay, good enough. So we are done with this also. Now there is a last requirement to this question, and that last requirement is respond to my request regarding the use of data analytics, to enhance audit efficiency, effectiveness, and the quality in the group audit. Okay, now see. If I could just see what he's writing, the increased use of data analytics by many audit teams to provide several benefits, including more efficient and effective audit work and enhanced audit quality was discussed. The audit engagement partner has asked him to prepare information for so and so. Now, what I would suggest you people to do is that there is actually an examiner article on data analytics. There is an examiner article on data analytics. I would want you people to review that, and because it's actually more or less the benefits of the data analytics that you got to write down in this scenario. So it's nothing application based, it's all something that is mentioned in the past examination. It is something that is mentioned. So what I would want and what I would suggest you people to actually review that data analytics article. And also what you could do is that you could go to YouTube and you could check out my video on YouTube. I just need to check if it is basically on my channel or it's on the Scribbers channel, so that I could just tell you that where you can, or you could probably look at the playlist of this AAA June 2021. There's this advanced audit and assurance playlist, and I'm gonna switch on to another channel just to see if I'm able to find where exactly am I able to find it. So in the meantime, I'm just going to share you the link to the video that I have done on data analytics, which is also available on the YouTube. So you could possibly, okay, let me just see if I could just find out. Okay, now not this one. Okay, yes. This is the playlist. This is on Luqman Rafiq. The channel's name is Luqman Rafiq. You could search out this channel, my channel, Luqman Rafiq. It's actually there. I'm also sharing the link in this specific. I'm also sharing the link on this specific in fact, what I could do is that I could also share, because this class is also being streamed live. So I can also share it on this also. So you may actually check out this data analytics. I'll share. This specific, also sharing the link on this specific. Okay, so I've copied it so that you people may look at it. Now let's move a bit forward. We're done with question number 1. Any questions, any issues with respect to question 1? Yeah, any issues with respect to question number 1? Yeah, any issues with question number 1? Let me know. Okay, good enough. Thank you, Huda. Now let's move on to the next question, which is gonna be question number 2. This is question number 2 that we have to do. Okay, we can take a short break. We can take a short break. We can take a short break. And we can start off in 10 minutes time, so that you people may relax before we go on to do question 2 and question 3 of this paper. Okay, so welcome back. Before the break, we had gone through question number 1 of the December 2020 examination paper of the AAA. And now what we are going to do is that we are going to go about this question number 2, which is the same attempt. So we're going to go through the question number 2 now. Now let's just see. It says it is 1st July 2005. You are the audit manager in Welford and Co., a firm of chartered certified accountants, currently working on 2 clients. Your role includes performing post issuance. What does your role include? Your role includes performing post issuance quality control reviews, and you have been asked to review the audit work performed on reverse score for the financial year ended 31st January 2005. So what is it? We got to act as a consultant who's going to talk about the quality. We need to act as a consultant who's going to talk about the quality. That is something that we have to do. Now, let's move a bit forward and let's discuss further. It says the following exhibits available on the left hand side. So you could see, just like it was there in question number 1, that there were certain exhibits. So there are certain exhibits in question number 2 also, which we have to actually review. And what we need to do is that it says that reverse team and fees, information relating to the audit composition, the time is spent on the audit fees charged. Okay, just wait a bit. I don't know what happened. All of a sudden my screen actually went on to incorrect window. So I am just going to restart and we're going to start off again. Just give me 2 minutes time. Some wrong button got pressed and I actually ended up landing onto a wrong page. Just wait again. Okay, I don't know what actually happened, but I probably pressed the wrong button. Because of this, it actually happened. Okay, let's just start. So basically, we are gonna talk about this. We're gonna talk about this Welford and Co. We're gonna talk about this Welford and Co. A firm of chartered certified accountants currently working on 2 clients. Now, there is this reverse company, team and fees. Information regarding the team composition, the time is spent on the audit, and the fees charged to the client. That's one area. Then there is this going concern area. Then there is this going concern area. There is this going concern area which needs to talk about. Also, it says the following exhibit available on the left hand side of the screen provides information relevant to the Broadway group. So we have got the information pertaining to Broadway group also. Now, if I could just look at the requirement, there is requirement A, there is requirement B. What is there in A? What is there in B? With A, it says comment on the quality of the planning and performance of the audit of reverse company, discussing the quality control, ethical and professional issues raised, and recommending the appropriate actions to be taken. So that's the first requirement that we shall be talking about. I repeat, that's the first requirement that we shall be talking about. Now, okay. The second is, it says evaluate the matters which should be considered if the Welford accepts the audit of Broadway group. Again, you see, there is a similarity in the examination. We had a similar type of questions. I repeat, we had a similar type of question and we did go through it. Now there is almost a similar type of question over here also. So what we are going to do is that we are now going to go through each and every section and we'll see what the examiner is saying. Are you able to see my screen? Yeah, are you all able to see my screen? Yeah, everyone please. Am I audible and are you people able to see my screen? Okay. Sibongal, the students, okay, there are few who can see, there are few who cannot see. If there is any single student who can see my screen, you cannot see my screen. Okay. Can you see my screen now? Yeah, can you see my screen now? Okay, I hope you are able to see my screen now. Yeah, can you see my screen now? Okay, thank you. Now, so the first requirement of the question was comment on the quality of the planning and performance of the audit of reverse company, discussing the quality control, ethical and other professional issues raised and recommending appropriate actions. Let me tell you, when the question comes in, the quality control, ethical and the other professional issues, always remember that you don't have to segregate. So what you're going to do is that you could say that planning stage. If you want to segregate, you can do at the planning stage, and you could do the segregation at the performance stage. And you could say that the quality control, ethical and other professional issues arising during the planning stage of the audit are as under. And the same thing is going to be here, where we are only going to change this performance stage. Now, I don't know how the question is structured. All that I know is that, I repeat, I don't know how the question is structured. All that I know is that that if I can segregate, then I'll segregate for the planning and the performance stage. I won't segregate for the, I repeat, I won't segregate for the quality control, ethical, and the professional issues, because I technically cannot. Usually the information is not that much available that you can segregate the answer for these three. Now, what is going to happen is, let's just try to see. Number one, Reverse Company is a listed company. Reverse Company is a listed company operating in the construction industry. Okay, now, so it says Reverse Company is a listed company operating in the construction industry. The company complies with the corporate governance regulations and has an audit committee. They comply with the corporate governance regulation. They have an audit committee. They're a listed company. Rivers has been an audit client for Welford for 8 years, and Bob Newbold has been the audit engagement partner during this time. So the first one of them is basically there is a familiarity issue with the presence of Mr. Bob Walmerd. What's his name? Bob Newbold. Because he has been conducting the audit. Because he has been conducting the audit. Bob Newbold, as he has been the partner for the last 8 years. So there is actually going to be a familiarity issue. Now what next is there? It says that River & Co.'s audit report was signed by Bob Newfold and issued last week. The report contained an unmodified opinion. So there is basically this compromises the professional skepticism, and this could be the reason for a continuous unmodified opinion over time. Now what next is there? The next situation is, it says that Welford and Company requires its staff to record each hour they spend working on each client in the firm's time management system. From reviewing the time records relating to the audit of Reverse Company, you're aware that Bob and the other audit team members recorded the following amount of time on the audit. So the 6 audit assistants have spent 130 hours. Senior audit manager has only spent 6 hours, and the Bob has only spent 2 hours. So what is actually going to happen is that you would say this thing, that from the time by reading the question's content, I am actually able to ascertain that I cannot even segregate the planning and the performance stage together. So I've actually mentioned all of these. From the time management system report, it is evident that Bob is not supervising the engagement regularly, and nor is his senior partner or senior manager doing it, as it is evident that as it is evident that they have spent very less amount of time as compared to the time spent by the other audit team members, indicating that appropriate quality control is not exercised. Now what next is there? If I could just go back here, it says it is apparent from a review that almost all of the detailed review of the audit working paper was completed by Anisa Town, who has evidenced her review by stating final review. On each page of the audit file, she has recently been promoted to the audit manager. So you could say that the Anisa Town has almost supervised the whole audit, and she is not very experienced in the role of the audit manager. Her review has been marked as final review, indicating that the review is not performed by senior manager and the partner, indicating lack of supervision and monitoring during the entire audit. Now what next is there? It says you're also aware that Bob Newbold booked a total of 40 hours to reverse company in respect of non-audit work performed. The only information you find in the documentation is that the non-audit work related to special investigation, and that dot confirm that it does not create a threat to auditor's objectivity. So what happens is that reverse is a listed entity, and the auditor may not engage in other assignments with a public interest entity unless it does not create any impact on the auditor's objectivity. So that is also one of the issues that has arisen. The next one of them is basically furthermore the integrity of the partner is also in doubt, as he may have been provided with a special benefit for issuance of unmodified opinion. Partner has sufficient time to spend on a special investigation, but he is not spending time supervising the audit for which he is deployed. Now what next is there? The next situation is the total fee charged for the audit was this, and the fee for special investigation was 890,000. Okay, the audit fee is substantially lower than
the fee charged by Bob, this will reduce the importance of audit for Bob and the firm and shall compromise on the quality of the audit, as is evidenced by lack of interest shown and time invested by Bob and his senior manager. So what have we done? We have actually identified these different type of issues that have arisen. Now what next is there? When I talk about the next situation is, there's not much left here. Then the going concern issue. So if I could just talk about the going concern issue, it says, from reviewing the audit working papers, you're aware that going concern was identified as a significant audit risk at the planning stage of the audit due to low profit margins or losses being made on the company's construction contracts. And increasing economics uncertainty, the company typically has 20 contracts ongoing at the time. So what happens is that the going concern was identified to be one of the issues at the time of the planning stage. किधर है? किधर? Okay. Yes. Basically, I don't know what happened, but my mic actually got malfunction. So we're gonna continue. I know the voice quality won't be that good, but still. So I'm just trying to continue with this computer's microphone. Maybe that the voice quality won't be that good, but still, till the time I get the second mic, I can actually continue teaching with this specific microphone. So anyways, okay, let's come back to this question. Okay, so basically what happens is we were discussing this thing that I repeat, we were discussing this thing that most of the audit work on the going concern was performed by Mary Loxley, an audit assistant who has just taken her last professional exams and is not even qualified. Is not even qualified. So basically, I wrote down this specific thing that there is a lack of appropriate. I wrote down this thing that there's a lack of appropriate power, the delegation of authority. The reason being that what you should have done, I repeat, what you should have done is that you should have actually, um, you should have actually, you should have actually delegated this important task to somebody who is experienced. You should have delegated this task to somebody who is experienced. Now let's move a bit forward and discuss further. The next thing is it says the majority of the audit work performed on going concern focused on review of 5 major contracts to determine their profitability. The management of rivers identified the major contracts for review and provided Mary with forecasts indicating the contracts would make a small profit. So what happens is that, again, management has identified the contracts for Mary to perform audit. This is a clear violation of good quality practices as the selection/sampling procedures should be performed by the auditor himself rather than the client. Should be performed by the auditor himself rather than the client. Is that okay? Now, is that okay? Yeah, is that okay? Okay, let's move a bit forward now. My apologies. I can understand that my voice is actually a bit not up to the mark right now because of my microphone being causing an issue. So I just switched on to the computer microphone. Now, Mary confirmed that the assumptions used in forecast agreed to assumptions used in previous years and concluded the contracts which she had reviewed support the going concern status of the company. So the circumstances have changed. The circumstances have changed. The economic environment has changed, and on this basis the new type of I mean on this basis a new type of evaluation and assessment must have been made to identify whether the going concern assumption is valid on the basis of present circumstances. Whether the going concern assumption is valid on the basis of present circumstances. Now, what next is there? It says Mary completed the conclusion on the going concern stating that there is no significant uncertainty on the going concern. So basically, the senior personnel should have reviewed it. Senior personnel should have reviewed it. I repeat, senior personnel should have reviewed and discussed the going concern assessment with the management. So that's something that should have happened. It should have been the senior personnel who should have actually discussed it and who should have actually performed the procedures for it. That is something that the senior personnel should have done. Now I'm opening it up. Kindly look at it and confirm to me that you all are okay with this. Okay, kindly review it, please. Okay, so we have actually gone through it. So we are done with this, one of the requirements of the questions. We are done with this, one of the requirements of the question, and that was a 15-mark requirement. All that you have to do is that you have to identify these issues and you have to actually comment that why exactly are these issues. And you have to comment that why exactly are these issues. Now, let's move a bit forward and let's discuss further. Now, the next requirement to this question is that, I repeat, the next requirement to this question is that evaluate the matters which should be considered before Welford and Co. accepts the audit of Broadway Group. So now we are going to be talking about the second requirement. So let's talk about this Broadway Group. There are many things provided with respect to the Broadway Group. It says Welford and Co. has been approached by the audit committee of the Broadway Group to become its audit provider. The parent company of the group, Broadway, is a listed company, and the group has a total of 14 subsidiaries, 10 of which are foreign subsidiaries.
The group is a food processor and each of its subsidiaries provides a particular ingredient used in the group's main processing plant, which is based in the industry. The subsidiaries produce raw ingredients including corn, wheat, vegetable, and nuts. So now, if Welford and Company decides to accept the appointment, it will provide the audit for the group consolidated financials and for the individual financials of some of the subsidiaries. For some of the subsidiaries. Now, the group operates, the group audit committee has suggested that to keep the audit fee as low as possible, Welford could audit the companies based in this country, but the foreign subsidiaries would be audited by the local firms. These foreign subsidiaries contribute to the 60% of the group's total assets. Group has recently become involved with a business in Farland, a remote country which produces tropical fruit. The business is not incorporated as a company and local regulation only require financials to be prepared or an audit to be performed for companies. From an internet search, you obtain the following information. Local, one subsidiary palm company has been accused of environmental damage due to its operations impacting on the rainforest and causing harms to the wildlife. There have been some protests by concerned citizens in the country where palm is located. Digital recordings of these protests have spread worldwide on social media. Expansion of operations. The group has recently expanded its operation on certain country by acquiring a large area of land, which to grow wheat. To receive the government approval, a significant incentive payment, this is a malpractice, was made to the government minister. This has been reported widely in the media. Okay, now the examiner is asking us that evaluate the matters that should be considered before you accept the audit of Welford Company. So before I go on accepting the audit of Welford Company, there are multiple things that you need to keep in mind. I would just go on from the start. Number one, it's a company which is a large company. So the first thing is that if it's a company which is a large company, so the first thing is that you could say that do you have the resources to cover such a large business? How would the logistics be managed? Furthermore, the correspondence with many component auditors would need to be done. Only 40% of business is audited directly by us, and for the rest, reliance on component auditors is to be made. Then what happens is that the pressure to keep the audit fee as low as possible, the quality issues would arise on the audit. Not too sure if Welford team is sufficient enough or competent enough to correspond properly on the group audit. Integrity is in doubt due to non-favorable, non-environment friendly activities. due to non-environment friendly activities. Also, the practices of bribery by management further creates doubts on its integrity. Access to information for the components will be available so you got to consider all of these. I repeat, you got to consider all of these. You got to consider all of these things when we will be considering this specific scenario. So I'm just gonna zoom out the answer so that you could see the pointers that I've identified. Obviously, from the exam perspective, you won't be giving the pointers. You would be writing down the proper answer. But just to give you a guidance, I have written down the pointers. Yeah, please let me know if everyone is okay with it, so I may proceed further. Yeah, let me know if everyone is okay with it. Okay, so we are done with this question also. I'm just wondering how the examiner has given such an easy paper. How is your viewpoint? How do you people find this paper to be? How do you people find this paper to be? Is it an easy paper or is it a difficult paper? Yeah, what's your feedback? Yeah, it's an easy one. Nandini, now what about others? What's your feedback? Yes, Kamran, I think if you could actually just follow the technique that I adopt, you will actually also be able to do it this way. Like what I do is that I go very slowly and I go one by one and I keep on noting down things. I keep on noting down the things. As soon as I move forward, I keep on noting down the things. And I think that's the most important aspect, because a lot of people would wish to actually go about doing the entire question and actually um, then actually writing down the answers. That is something not possible. You should write down the answer. You should write down the points as soon as you move forward. Thank you all for this. Let's move on. Let's try to go through the last question now. So basically, the last question of this is that it says it's 1st July 2005. You are the manager responsible for the audit of Meyer and Company, a listed company, and in the process of completing the audit of financial statement for year ended 31st March 2005. The audit report is due to be signed in the next week The principal activity is publication of trade and scientific journals. You are being given this thing that the revenue right now is 108 million. It was 102 million in the previous year. What I could do is that I could just simply say what's the revenue change. I could simply do is that I could say what's the revenue change. Let's try to identify the revenue change. It's actually 5.88%. Then I could actually say what's the PBT. Your profit before tax has actually increased by 11.83%. What's the change with respect to the total assets? Your assets have actually increased by, what? One divided by 149 gives you 0.67%. 0.67%. If I could say the profit margin. Okay, now a lot of you people would be wondering that why did I start doing the calculation now? Because I saw here that there is no spreadsheet. So I realized that it's all going to be word processing. It's not going to be anything on the spreadsheet at all, going to be a word processing. So I actually started doing for the word processing. Now, the profit margin for 2000 x4, 2000 x5. So what is actually going to happen is that .61% is the profit margin for 2004. For 2005. And it's 8.03% for 2004. Now, what can you see from here? Your revenue has increased, but your profit has increased substantially. So probably without looking at the question, I could see that probably the costs are understated somewhere or the other. The costs are understated. Now it says the following exhibits available on the left-hand side of the screen provide information relevant to the question. Details regarding issues you have discovered during a review of the audit working papers, chairman's statement. The information should be used to answer the question requirement with response option provided. So what are these completion matter? But before that, I'll just go through the requirement of the question. It says using information in exhibit 1, comment on completion matters to be considered in relation to issues described and recommend the further action necessary before the audit report can be signed, and evaluate the implications for the audit report if no adjustments are to be made to the financial statements. So you could just type out, or you could just copy paste the requirement of the question here, so that it makes it easy for you and for the examiner also to identify. Why? Because what would happen is that you can easily identify, and the examiner can also know that you've answered the question for this area. Now, what happens next is that, just give me a minute, please. Okay. Now let's just see. So basically, this is one of the requirement of the question. What is the second requirement of the question? The second requirement of the question is using the information contained in Exhibit 2. Describe auditor's responsibility in relation to other information presented with the audited financials and comment on matters arising from extract from chairman's statement and assuming no changes were made. Okay, so this is basically ISO 710 and this is about the remaining, sorry, not 710, 720. And this is about the remaining other aspects of the ISOs. Now let's just see. If I could just identify one thing, which is that what exactly are the things that we are going to write in the requirement number 1? Because the first thing is we need to go through the requirement number 1. We need to go through requirement number 1. Now let's try to understand this. It says you are in the process of reviewing the audit working papers and have identified the following potential issues. So what is it? You are in the process of reviewing the audit working papers and have identified the following potential issues. Sale of division. Myron is at the advanced stage of negotiation to sell its scientific publishing division to a competitor. The division contributed revenue of $13 million and profit before tax of $1.4 million. The draft sale agreement, which is due to be finalized by 1st August, shows an agreed sale price after cost of disposal of $42 million. The division is a separate cash generating unit of Myron. None of the assets of the divisions are held under a revaluation policy, and depreciation is charged on a straight line basis over the determined useful life of the assets. The finance director of Myron has not made any disclosure with respect to the upcoming sale in financial for year ended so and so, as he considered it to be part of the next year's accounting transactions. However, the division has been written down from its current carrying amount of 45 million to the estimated value in use of 41 million of 41 millions. Now, let's try to have a discussion of this. Yeah, Michael Akoto, inshallah. Okay, now let's just see. The next is Myron operates from a leased premises and additionally holds leases for printing equipment for journals. These leases are material to financials. The company has adopted IFRS 16 for the first time this year and has adjusted the opening balances and equity without restating comparatives as permitted by IFRS. Okay. Now, a lot of you people would be wondering, we don't remember IFRS 16. Okay, that is okay. Even in the SBR, we don't teach the first time adoption procedures. So you don't have to worry about it because that's not even in the course. So even if that is not in the course, the examiner has given you the information. So you can do on that basis. Now, it says there is, however, no reference in the financial adjustment statements to change in the policy or the reasons There is, however, no reference in the financial statements to the change in policy or the reasons for making the change to accounting policy. The adjustments have already been checked by the audit team and deemed appropriate. Now, so basically, what are the things? If you could see this first part, is going to be the scientific publishing division meets the criteria for classification has held for sale. Should be classified as such when the management has decided to. So what happens is that the scientific publishing division meets the criteria for classification as held for sale, and it should be classified as such when the management has decided to. I repeat, when the management has decided to. Should be classified as such when the management has decided to dispose it of. Upon classification as held for sale, it should be measured at the lower of cost or NRV. Sorry, at the lower of carrying amount or fair value less cost to sell. So upon classification as held for sale, it should be measured at the gain or loss to be recognized in P&L. The depreciation should stop. The depreciation should stop. The depreciation should stop. And what should actually happen is that the assets should be presented as held for sale in the financial statements after current assets. In case if this scientific division represents separate area of operation, then it should be classified as a discontinued operation. In case if the scientific division represents separate area of operation, then it should be classified now with respect to for the leases they are material to financial statements. Sorry, and the results of the discontinued operations should be presented separately in the financial statements. For the reasons they are also material to finance. They are also material to the financial statements. For the leases, they are also material to the financial statements. For the leases, they are also material to the financial statements. Next is that reference about changes in the policy is to be made in the financial statements. The appropriate disclosure notes should be provided. The appropriate disclosure notes should be provided. Is that okay? Now, appropriate disclosure notes should be provided in the financial statements. There was also something about the valuation. Okay, now, so basically this is all about it. This is what you're going to do with respect to it. So when the questions requirement was like this, comment on completion, matters to be considered in relation and recommend further actions necessary before the auditor's report can be signed. So to discuss with the management and those charged with governance about the corrections to the financial statements that are required to be made. That is something that you got to do. I repeat, that is something that you got to do. Now, there is another requirement, evaluate the implications for the auditor report. if no adjustment is made to the financial statement. Now, what would happen is that you would say that so discuss with management and those charged with governance about the corrections to the financial statements that are required to be made. Now, what else is there? There is something that you need to understand further. What is that? The implications on the audit report are going to be what? The matters are material to financial statements. The carrying amount of the assets of the division are the carrying amount of the assets of the division are what? We had the total assets, right? We had total assets somewhere here, 150 million. So it's actually what? 42 divided by 150 is equivalent. 42 divided by 150 is equivalent to what? It's approximately 28%. Further, the leased assets are also material. In case if the management's judgment is that, in case if the auditor's judgment is that these matters are pervasive, therefore he should issue a an adverse opinion if he believes that the effect of these matters is non-pervasive. Then if he believes that the effect of these matters is non-pervasive, then a qualified except for opinion shall be provided. There's last aspect, which is basically a reference to the basis for basis for qualified or adverse opinion section should be given about these misstatements. So that is something that you would have to do. The calculations that we did, apparently they were not of any use. So I just disregarded them. Why? Because what happens is that I thought that they may be helpful, but they are not. Yeah, so are you all okay with this? Yeah, are you all okay with this? Okay, good enough. Now let's move a bit forward and let's talk about the second requirement, which says using the information. Why you think it? Okay, what is it that I think will be helpful? Michael Akoto, I did not get your point. Okay, because it's not applying directly onto this scenario anywhere. It's not applying directly onto this scenario anywhere. Now, this is the chairman's statement. Now, the calculations that we did might actually be helpful over here. I was too quick to delete them. Yes, this is where the relevance comes in. My apologies. It wasn't relevant up till the part one, but I forgot that I have part two to be done also. So all the effort that I did, I wasted that, unfortunately. Anyways, it says as part of your review of Myron Company, you have been presented with an extract from the draft chairman's statement, which will be published in the annual report alongside the financial statement for the year. Extract from chairman's statement. The company's results for the years are extremely positive. Okay. First of all, let me go back. I am sorry, I actually did a bit quick. We had a change in revenue of 5% something. There was this 11% change. That was what it was, right? Now, what does it say? It says our year-on-year revenue growth is 5.9 and our profit growth is even stronger. Oh, yes, this is okay. All our revenue streams have performed well, especially at the scientific publishing division, and we are looking forward to exciting and sustained growth levels next year. Well, this statement lacks integrity. This statement lacks integrity. You are looking to sell it off. At one point, you're looking for a buyer. And at another point, you're saying that it's going to grow again and again in the next year. As you can see from our auditor's report, auditors agree that our results are strong. No. And sound basis for taking company to even greater place. No. We have not given any such type of opinion. We have not given any such type of opinion. We have just cemented that the financial statement gave a true and fair view. That's it. We have not given any such type of things. We have not given any such type of opinions. Okay, we've also made significant progress with our social and environmental aims of reducing our carbon footprint and encouraging the reuse and recycling across our division. We are proud to announce that we have now moved all our printed products to recycled paper. Now, we are not aware of all this, but maybe they might have moved on to all this. I repeat, we are not aware of this, but maybe we might have moved on to all this. Now, let's move a bit forward and let's discuss further. What next is there? It says to help with your review of information, you also have the following analysis of the results for the year. Year ended 31st March 2005, other division, scientific division, total. Year ended 31st March 4, other division, scientific division, total. Revenue is there, PBT is there. A file note from the audit supervisor states that at least 3 of the publications of Myron cells are not prepared on a recycled paper. Now, what happens is that with respect to this requirement B, I'm just going to write down this requirement B. Now, what is actually going to happen is try to understand. Auditor's responsibility is to read other information accompanying financial statements. That's one thing. So the auditor has a responsibility Okay, just wait a bit. I got a bit disconnected. So basically, auditor shall discuss such inconsistency with management and those charged with governance, update his own understanding if required, update his own understanding if required, So update his own understanding if required. And in case if there is a inconsistency, okay, in case of error, request management and those charged with governance to rectify. If they do not rectify, auditor shall refer about inconsistency in the auditor shall refer about the inconsistency in the other information section, identifying the report, which has inconsistency, Now, I want you people to actually to list down the inconsistencies here. Yeah, I want you to take 2-3 minutes, try to list down the inconsistencies. Okay, so I've got the answers from you people. Uh, okay, apparently the inconsistency inconsistencies which are being found include: number one, the profit and revenue growth are correct, but their future sustainability and additional growth are question marks, as they plan to dispose of the scientific publishing division. The second thing is that all publications are not on the recycled paper. The third one of them is, the second one of them was that all the publications were not on the recycled paper. That was the second one. The second all publications were not on the recycled paper. That was the second one. Further one of them is, so this is something that you have to mention. We got to talk about all of these. We got to talk about the other information only, that where the other information is inconsistent with the company's financial statements. Now, so the implications for the audit report is that we will discuss with management and those charged with governance. We will include other information section. We will explain that we have a responsibility to read and not to report, that we have not audited other information, and that the specific and that the chairman's statement has inconsistencies with the facts. That is what you got to do. I repeat, that is what you got to do. So this is something that you will have to, this is something that you would have to say. Okay, good enough. So we are done with this question now, which was basically about this specific thing. So we are done with the complete paper now. Alhamdulillah, we have just covered up the entire paper. We have covered up the entire paper. Okay. Now, so we have actually done what we planned for today, that the latest examination paper on the CBE format, and Alhamdulillah, we have concluded it. So if anyone has got any questions, you may ask, or else we will conclude our session here. Yeah, anyone having any questions, please? Yeah, I'll share the PDF platform. Many Mozobe, I cannot commit because I myself is very much occupied. So I just cannot commit. Maybe you can explore other lectures that I have delivered on the YouTube and on the Facebook. They are available. There are many different types of lectures that I have delivered, and they're available on these portals also. So you may review them from there. Okay, so thank you very much, all of you. I will share this specific thing which is the today's handouts, today's notes. I'll share with you people on the